Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talking about? Well, we're going to talk about the methodology in action. This week I'm going to show you something that's not very pretty, something a guru has never shown you. And I want to continue my discussion on getting ready to trade emerging trends. And basically I just want to build on what we talked about last week. And this is some of the things that we talked about in prior shows also. Housekeeping, I do take requests. It makes my job a lot easier. Let me know what you need me to cover, and I'll be happy to cover it. If I can't fit it into this time slot every Thursday night, except maybe next week because it's Thanksgiving, I do a webinar, Dave Landry's The Week in Charts. Here's all my contact information. You need to reach me, davelandry.com/contact. If you want the slides from this presentation and all the other presentations combined, go to davelandry.com/StockCharts. I also give you all three of my books in PDF format. There's some pretty good stuff in there, if I say so myself. In fact, I actually dug some of it out, he tried to say, recently. If you need to reach me on Twitter, @TFollowingMoron is my handle. All right, let's talk about the methodology in action. And this week we don't have any mystery charts. We have a follow-up on a mystery chart, and it's not pretty. Spoiler alert. Anyway, as I've been saying quite a bit, lately the action has been mostly no action. And as I preach, I really wish someone 20-something years ago, it's going to be 30 soon, geez, would have told me, hey, it's okay to sit on your hands. You don't have to fight it out all the time. And I wish somebody would tell me that a long, long, long time ago. Anyway, so lately it's been ebb and flow, and it's been a cycle of, okay, let's find some setups, can't find any setups, we found some setups, so we're not getting triggers. And then if we do get triggered, there's position management. And we did get triggered on one. We'll talk about that in a few minutes. You got to keep on doing your homework. I see a lot of people give up right about now, and usually that's one of the harbingers of a bottom. When people start throwing in the towel, giving up on this trading thing, usually the market bottoms and starts to rally. And bull markets, as you probably know, are a lot easier to trade than bear markets. Now, you have to be willing to take your lumps. And if you get stopped out, you have to be willing to shout next. And you might shout mother, father first, but that's okay. And here we are, mother, father. So this one stopped out today. Laugh to keep from crying. Sometimes my clients are like, why are you laughing? It's not funny. No, I'm laughing to keep from crying because I did take this trade. And unfortunately, as I often say, I took it across multiple accounts. So this, usually I say that when it's a fortunate situation. But this time, not so much. If we add all that up, my entry minus the stop, I gave it a little wiggle room on the stop. And you'll notice I got in slightly higher than what I recommended, as mentioned before, just with the alarms and everything going off. It got in a little bit late, but it doesn't make a huge difference, at least not in the bigger scheme of things. This is what it looks like in the model portfolio. The model will exit everything mechanically, but in my own trading, I actually apply a little bit of discretion. So you can see, in this case, we took a full 2% loss. It, spelled with a silent SH, happens. Now, you might be wondering, well, this guy hasn't done so great lately. How is he surviving? Well, you catch these occasional big winners, and it would be great if they came along a little bit more often. But basically, you have to chip away at it, chip away at it, chip away at it, and you finally catch one. And I don't want to make it sound too elusive. I've been accused of doing that in the past. But it can take a while, and that's the point I want to make, is that sometimes you just have to wait and wait and wait and wait and stay prudent and continue to follow your methodology through thick and thin. And by the way, that's the secret to any methodology. If you have a viable methodology, something that's conceptually correct, make sure you follow it through a few cycles. What I've seen in more recent times is people coming to my trading service, they give it about a month, they see me tell everyone to sit on their hands, and they're thinking, what good is this guy? He just says sit on your hands. Well, sometimes it's good to sit on your hands in the markets. And again, I wish somebody would tell me that a long time ago. Now, on this stock, which I've never had happen to me in my career, it actually pays a meaningful dividend. And I just got one of those dividends actually today. I'm recording this on November 14th of $500. So you add all that up, plus the $1,000 on the swing trade, there was 69.20 in open profits, plus the 1,000 of swing trade, plus the 1,900. You add all that up, and it comes to 19,820. Now, keep in mind, this is based on a 100K accounts. 2,000 shares were initially put on at $4.89, and 1,000 shares were flipped out about a point higher. So you add all that up, and nearly 20% gain on a 100K account. That's much better than the poker now. You just need a couple of these a year, and sometimes just one to really help make your year, as long as you're grinding it out in the rest. Make a little, lose a little, make a little, lose a little, and then bam, knock it out the park. Now, you might be thinking, as I am, what have you done for me lately? I'm dating myself a bit here, aren't I? Well, not much. And a lot of my commentary lately, again, has been sit on your hands. And we had quite a few setups. Well, I say quite a few, maybe just a few, that I showed but never triggered. So no capital was put into harm's way. But the secret to trading is being patient, waiting for the market to begin to trend again, and waiting for meaningful setups. Now, the other thing I just want to kind of throw out at you real quick, if I saw that stock again tomorrow, in fact, after the dust settles today, I'm going to look at it tonight. It might be worth a shot going in tomorrow. But if I saw that stock again tomorrow, I would take it in a heartbeat. And that's the litmus test. And I think that's when you start the litmus test for a good trade. And I think that's a litmus test for when you were beginning to reach a little bit of that enlightenment, when you get stopped on a trade and you realize you didn't do anything wrong, you followed your plan, it was a good setup going in, and again, it happens. Now, sometimes when you do that post-mortem, you'll think, geez, what the hell was I thinking? And that's okay too. You're getting closer and closer when that occurs. Okay, let's shift gears and talk about emerging trends. As I said last week, you're like the American pioneers. You're either going to get the arrows or the gold, but the chance of the gold makes it all worthwhile. The ARLP, which we're still in, and it's doing okay, knock on wood, still doing okay, although it did come close to stopping out recently on the remainder of the shares. But I'll follow up on that one, especially if it stops out as a closed trade. Anyway, here's a bow tie from 2020 that we eventually stopped out in 2021 last year, and we talked about this one in the prior presentation. So this is what we're looking for, the chance of the gold, the 500% move from one of these transitional setups where you catch the mother of all bottoms or the mother of all tops, and that's what we're going for. Now, keep in mind, when you are trading a transitional pattern, again, you are a bit of a pioneer, and that means that the accuracy is going to be a little lower, and you will occasionally get stopped out on these positions. But the chance of the gold and these huge moves makes it all worthwhile. Now, like I said last week, just real quick, sometimes tops can be a bit of a process, and sometimes they can be an event. And bottoms are the same way. Sometimes they bottom out nice and slowly, and then sometimes they take off. So the ones illustrated on the left would be more of like a bow tie type of setup, and the ones on the right would be more like a first thrust. And by the way, what's kind of interesting for the overall market, at least, tops tend to be more of a process than an event, and bottoms tend to be more an event than a process. Now, that's not a hard and fast rule, but that's something that Greg Morris had pointed out to me years ago, and it does make a lot of sense. Everybody thinks the market just crashes. Well, everybody eventually feels the market when it starts to crash a little bit. But as I said, quite a bit, especially during all this market timing I've been talking about over the last couple of years, is that you do have time to get out of the way in the overall market. Now, before I digress too far, let's take a look at what happened back in February. According to the bow tie setup, you want a major new high for shorts and a major new low for longs. And in this case, we had an all-time high, and then we had a fairly tight crossing. You can see the bow ties came together fairly quickly, going from green uptrend proper order, meaning that the 10 simple is greater than the 20 exponential, and the 20 exponential is greater than the 30 exponential, to downtrend proper order, 10 less than 20 less than 30. Now, ideally, in a bow tie, you'd like to see that happen within, let's say, 2 to 4 bars, somewhere in that range. And that means that there's a major shift in trend that happened fairly quickly. Ideally, in an ideal world, we'll go straight from green to red for these crossings. Anyway, it did make a higher high and a higher low right here. And you're going to enter below the low of that higher high and the higher low. Now, you want to give it a little bit of wiggle room so you don't get triggered in a noise alone. Now, if it continues to pull back, you would treat it just like you would trading a pullback, enter at higher levels. Now, let's just take a look at that one more time. So that's the higher high and higher low bar. And then you would drop this down a little bit, give it a little bit of wiggle room so you're not triggered on noise alone. And in this case, it began to pull back, so you would treat it more like a pullback, and you would enter as the trend begins to resume. And you would stop yourself out at the peak of that pullback plus some room for noise, and that's going to be a little bit more than the wiggle room you use on an entry. You want to give positions enough room to breathe. Now, let's take a look at where we are now vis-a-vis the bow tie proper order and the bow tie setup. Now, this was somewhat of a major low. If you back the chart way out, you could see the October low was right at around 2-year plus lows. So that's fairly significant. So the point I'm trying to make is you don't want to look for bow ties at these high levels, okay? You're much better off looking at bow ties once you start hitting those multi-year lows. And again, if you're on the short side, all-time lows tend to work the best. For individual stocks, all-time lows tends to work the best too. The most people on the wrong side of the market. Now, we had a sloppy crossing here, and green is uptrend proper order, red is downtrend proper order, obviously. And you can see the blue did cross over, so the blue, or 10 simple, is in uptrend proper order, but the other two aren't, and they didn't cross over till way over here, okay? So 10 greater than 20 greater than 30 turns green. If there's somewhere in between, it's yellow. And then obviously for the downtrends, 10 less than 20 less than 30, as you can see here, 10 less than 20 less than 30, then it's red. And again, as I've said ad nauseum, but somebody's going to ask me, this just counts the number of bars that you've been in downtrend proper order. So look for that bow tie to make that crossing from uptrend proper order to downtrend proper order for downtrends, or downtrend proper order to uptrend proper order for uptrends. And again, you can see it took a long, long time for these moving averages to cross over. So technically, I would not call that a bow tie. If you were trading it as a bow tie, you would still be waiting for a 1-bar pullback, which fortunately we haven't seen yet. So far the market's begun to rally, although it's coming off a little bit today from these levels when I did the screen capture earlier. But you can see it's not a bow tie, but it's certainly improving nonetheless. We've had 4 bars of proper order. And the other thing too is if you're looking at like the 30 EMA, we also have 4 bars of upside Landry light. So that's certainly a positive there. And again, proper order, 10 greater than 20 greater than 30. All right, let me discuss first thrust real quick so you'll understand the pattern. One, again, we're looking for a major low, or for shorts, obviously a major high. We're looking for a big thrust off of lows. The market seems to almost go straight up. We're looking to enter on the first minor pullback. Now, if I was trading a longer term trend with a pullback, I'd like to see a much, much, much deeper pullback. But in this case, we're only looking for a lower low and a lower high. And you're going to enter right above that lower low and the lower high should the trend resume. Now, you can see you are a bit of a pioneer because you're getting in close to the bottom and you're not really waiting for that nice deep pullback. So you're not really getting a reversion to the mean. But what you are getting, should it trigger and keep on going, of course, is you're getting all those people who missed that bottom. They could possibly rush in because they don't want to miss the boat and push your trade higher. And that's the psychology behind this pattern, for what it's worth. So again, major lows, sharp thrust from lows. You want to see at least one lower low and lower high. So technically this would have been on this day here. but it kept pulling back. So again, like the bow tie, when it keeps pulling back, you would trade it just like a pullback. Short side, same thing, all-time highs or major new highs, sharp thrust lower. Your first little signs of a bounce, a higher high and a higher low. Now, sometimes you can get aggressive and enter just on a higher low, but for the most part, you probably want to wait for that higher high and higher low. In other words, at least a 1 bar pullback, and then you enter right below that 1 bar pullback, or again, if it continues to pull back, treat it just like a normal pullback. Now, the thing to keep in mind is people get a little hung up. They're only looking at maybe one pattern when it comes to these transitional patterns, but it could be several things. For instance, sometimes a first thrust can also be a bow tie, and obviously vice versa. So if we go back and look at the CPE that we talked about last week, and I showed earlier as the reason why we look for these trend transitions, notice it made this big old fat bottom, and it was making all-time lows. And then we had some Landry light to the upside vis-a-vis the 10 simple moving average. And we had that kiss of the moving average, which is the kiss my goodbye pattern. So it was a first thrust, it was a bow tie, and it was also kiss my goodbye. And you can see right there, there's a little kiss of the moving average. Entry here, and here's the first thrust. Okay, big thrust from lows, nice big fat gap coming off of lows, followed by the pullback. So that's the first thrust setup. And then you'll notice, again, also a bow tie. And notice, by the way, the transition was fairly quickly from downtrend proper order to uptrend proper order. Now, the other thing, too, is, and I believe I said this last week, notice it's also a big fat cup and handle at these all-time lows. I don't trade directly off of big picture technical analysis, as I've said quite often, but I will look for some sort of big picture technical analysis, ideally, to back my setup. So here we have a bow tie, a first thrust, first kiss after daylight, and it also is nicely within a big picture cup and handle. So first thrust, again, all-time high, ideally. Big thrust lower, big fat thrust lower, pretty obvious thrust, right? And then you need a pullback for that to happen. At least a 1 bar pullback. And technically, again, an aggressive entry might have been like right here on the, because this would be your 1 bar pullback here, higher high and higher low. Or as I said earlier, sometimes just a higher low. That would be a little more aggressive type of entry. And anyway, so in this case, pullback entry would have been when that pullback triggers. And there's nothing wrong with entering here. Obviously, you would have gotten stopped out. But again, as usual, you want to give it a little bit of room on that entry. I may have implied that you want to get in exactly above that high on this first thrust, but actually you want to give them a little bit of room. So the short would have been here. And you can see it initially went against you before it began to implode. So again, aggressive entry would be down here. Pullback entry would have been on that pullback. And you can see the market did sell off, at least initially, fairly nicely out of that transitional pattern. Now, let me show you something real quick. A micro first thrust would be sort of like a little first thrust, hence the name micro first thrust. I also call them pioneer first thrust. And be super careful if you trade something like this, because the chance of failure are fairly high, but the risk to reward is also fairly high too. So same thing as a first thrust. You're looking for a thrust lower, just you don't have as much, and then you're looking for that first little pullback. I just wanted to introduce that concept so at some point when you hear it again, you'll have a reference. Now, we talked about the first kiss after daylight last week, and it was almost a first kiss after daylight, the S&P 500 that is, bases the 10-day simple moving average, and I think the 30-day it actually was. But you can see we only had 4 days of downside Landry light on that micro first thrust setup. So I'm just showing you once again here that it can be more than one pattern sometimes. And as you can see here, it actually sold off fairly nicely out of that pioneer first thrust, which was also first kiss after daylight, or at least almost. Here's the rules in case you download my slides, just so you'll have them. This is from the Layman's Guide to Trading Stocks. And you're also going to get a PDF of my book too, so you'll have it there. But here it is for your reference. Now, the reason I'm harping so much on these emerging trends is I think we're in a get ready mode. Start keeping an eye out for setups, especially stocks coming off of very low levels. That's where your biggest opportunities are going to be if this transition continues in the overall market. Well, that's all my time for this week. I want to thank everybody for watching. If you need some follow-up information, again, DaveLandry.com/StockCharts. You can reach me at DaveLandry.com/contact. To everybody in the United States, happy Thanksgiving. I'm not going to do a show next week, so happy Thanksgiving, and I'll see you in a couple of weeks. I want to thank you all for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.